Scene 2, Introduction. Selling your home can lead to a significant financial gain, but it also raises important tax considerations. Whether you're upgrading, downsizing, or relocating, it's essential to understand how the IRS treats profits from home sales in 2025. One of the biggest tax benefits for homeowners is the capital gains exclusion. If you sell your primary residence, you may be able to exclude up to $250,000 of profit from capital gains tax, or $500,000 if married filing jointly. To qualify, you must have owned the home for at least 2 years. You must have lived in the home as your main residence for at least 2 of the past 5 years before the sale. You haven't claimed the exclusion on another home sale in the past 2 years. If you bought a home for $300,000 and sold it for $600,000, your gain is $300,000. If you're married and meet the ownership and use test, you can exclude $500,000, meaning you owe no tax on the gain. You may receive Form 1099-S from the title or escrow company if your sale results in a gain. Even if your gain is fully excluded, you're required to report the sale on your tax return using Form 8949 and Schedule D. If you don't qualify for the full exclusion, you sold investment or rental property, or you received a 1099-S. If you don't meet the ownership and use tests, your profit may be taxed as a capital gain. Short-term gains, those owned for less than a year, are taxed at ordinary income rates. Long-term gains, those owned for more than a year, are taxed at capital gains rates, which could be 0%, 15%, or 20% based on your income. However, partial exclusions may be available if you had to sell the home due to a change in employment, health reasons, or unforeseen circumstances. The capital gains exclusion does not apply to second homes or rental properties. Profits on these sales are fully taxable. However, you may deduct expenses and depreciation while renting. You can also use Section 1031 exchange for investment properties only to defer taxes. Maintain documentation of your original purchase price, home improvements and upgrades. These add to your cost basis, closing costs and selling expenses. Increasing your cost basis lowers your taxable gain, which can reduce your tax liability. Selling your home can be a major financial move, and understanding the tax rules ensures you keep more of your profit. Whether you're eligible for the capital gains exclusion or facing a taxable gain, SK Tax Associates can help you minimize your tax burden and file correctly. Contact SK Tax Associates today for personalized guidance on real estate tax planning in 2025.